When we look at structural reforms, I think this is one of the key areas. If you want to build a competitive economy, a productive economy, if you want to really enhance long-term growth potential, the only avenue is through structural transformation. And Turkey is investing in its human capital, going to continue to improve investment climate, deepen capital markets, do public finance reform, as well as achieve green and digital transformation. Is the program working? There is strong evidence that the program is working. First of all, we need to know how the program is going to work. It's a combination of sound policies and structural transformation. Good narrative. This narrative is helping rebuild investor confidence, and that is going to impact inflows, real exchange rate stabilization. All of these will foster speedier disinflation through rebalancing of growth, addressing imbalances in the economy. So this is how the program is meant to work. It is working. The country's risk premium has fallen dramatically from over 700 basis points to less than 300 basis points. Turkey's sovereign spreads have tightened, have narrowed significantly. We are now outperforming emerging market average since the program has begun. Exchange rate volatility has declined. Yes, inflation is high, nominal exchange rate is weakening, but real exchange rate has stabilized and volatility has declined. This is implied volatility, suggesting that Turkish lira's volatility is actually closer to the bottom of emerging market volatility band. Net portfolio inflows have improved significantly in the second half of last year. We believe this is going to gain momentum after local elections. External debt rollover ratios have improved substantially, both for banking sector and non-financial corporate sector. Compared to the first half of last year, Turkish corporates have access to global funding and at lower spreads, at lower interest rates. Current account deficit, as I mentioned earlier, has narrowed significantly, and it will continue to narrow going forward. Inflation expectations have improved. Now market sees inflation falling to less than 40% over the next 12 months. So market is close to what we are targeting, and this is very encouraging. We have rebuilt international reserves. International reserves are up by close to $37 billion over the past several months. And reserve adequacy has also improved. All these achievements, the progress has been recognized by rating agencies. They're now beginning their journey to upgrade Turkey. They've already upgraded the outlook. Rating upgrades are likely to come in the second half of the year. The risk perception is much better than the current rating. Actually, when you look at Turkey's spreads, it's 2 notches above what the current rating agencies have assigned to Turkey. So already market is pricing much lower risk for the country. So why would you consider investing in Turkey? We have brothers from Saudi Arabia, leading businessmen here. Well, let me start with a map. According to Google, we are the center of the earth. Now, well, putting aside the joke, Turkey is one of the best candidates for nearshoring, for friendshoring. We are friends with Middle East, with North Africa, with Central Asia. We are friends with Europe. We have a customs union. We've been engaged since 1963. And that makes us a really one of the best candidates in the region for manufacturing, for nearshoring, for friendshoring. So we believe that if you're doing business in Turkey, you could capitalize on this. Number two, Turkey is a big market. The size of population, the size of GDP, it matters. And Turkey is bigger than, look at this table. In some matrix, bigger than 17, 18 EU members combined. This is a sizable domestic market. Last year, Turkey's GDP was probably, we don't have the full year numbers, but probably was close to $1.1 trillion. This is a sizable domestic economy. If you look at Turkey's economy on a PPP basis, purchasing power parity basis, is the world's 11th largest economy. And therefore, there is size, and that matters. Secondly, is there growth? As I mentioned earlier, if you look at the past 20 years, if you take 2002 as 100, Turkey's economy in real terms have gone up to 288. Emerging markets, excluding China, India, is only 211. So while emerging markets have gone up from 100 to 211, Turkey has gone up from 100 to 288. So there is growth. The market size is big, and there is growth, and that really matters. If you look at per capita GDP and compare it with manufacturing value add, this is an important chart. It tells you that Turkey, relative to its per capita GDP, is ahead of Germany, which is a European powerhouse when it comes to manufacturing. It's one of the leading powerhouse. So relative to our per capita GDP, we're doing really well. We just need to make it more sophisticated.